Hey guys, welcome back to your weekly crypto wrap up. And as we mentioned last week, we knew that we were anticipating some very big news in the US markets regarding if the Feds were going to raise the interest rates and what could that look like. So as of today, this morning, the Feds raised the basis points by 75, which was something that was very much expected. But as we know with Jerome Powell, at times we can get a switch of tone from hawkish um, to where things can just go really crazy afterwards. And so we know that it's usually a very high volatile day whenever we have the Fed minutes or the FOMC, as we call it. And we want to take a look now and take a step back to see how that has played with our analysis for what we've been expecting. So, to get a good summary of what has happened today, we know from a global economic standpoint that we have been experiencing inflation pretty much. And there's a lot of things weighing into that when we look at crypto, which in many investors' eyes is risk on. And in this environment that we've been in now, it's not favorable to investors to invest in assets that can pose a risk, which is why we've seen crypto and traditional markets decrease in value. Hence why the dollar has been going bizarre when it comes to price action. So we're going to looking at today, as we do every week, we start with Bitcoin dominance. And what we're looking at here is what we've been anticipating for the last few weeks, which is our retest of this major area of support, which we have had now. And what we did was we came into this area of support and closed bullish. And as of right now, we are back testing this area. And so what does that typically mean? That means that given that this has been a very large, strong area of support for years, all the way dating back to 2018, that we could see just a little bit of a pump. And what does that to mean? That means that even though the markets are down, even though crypto is down, for Bitcoin itself, we can see it not decrease in value as much as the altcoins would. And that can be very confusing to understand. But what you're looking at is most people look at alts as more speculative than Bitcoin. And people will more likely liquidate or consolidate even into Bitcoin along with stable coins to lessen the quote unquote blood in the streets when it comes to their crypto portfolio. So I'm paying attention to see if this is going to hold and if we're going to get a little bit of pullback. I didn't even say this high, but if we're going to get a little bit of pullback, um, to see if even though Bitcoin is going lower, um, is it going to not be as bad as the altcoins would necessarily? So I'm paying attention to that, given that this has been a very strong area of support. Like I said, we've retested it on multiple times, even here just in the last two years. What is going to come of this play right here, given that we broke out of here and we're currently back testing? So keep an eye on Bitcoin dominance to see if we're going to have this sharp decline or if we're going to pull back some beforehand. All right, guys. And now the altcoin index, which pretty much confirms what we just saw, which is we were expecting a retest of broken support that has turned into resistance, in which we did. And we were expecting a retest of this area here, which is a major area of support. Given that we had the merge with Ethereum be successful, we knew that for most of us that price was already priced in, meaning the large run up that we saw with Ethereum and alts that happened over the last couple of months was priced in based on the merge. And so as of right now, what we're seeing is this sharp decline that we were anticipating. And because we see this in a different light compared to what we see with Bitcoin dominance, we are very far away from major areas of support compared to Bitcoin dominance had already retested support and gave us a little bit of bullish price action and is currently back testing support. So guys, what this means is we could see alts decrease in value at a much higher rate than we would Bitcoin, given the price going lower. So we want to keep an eye on that. This is our major area of support right here at 1565, 1567. And we want to see, are we going to have some consolidation, most likely, before we decrease all the way down there. And what that means is pay attention to your altcoin portfolio. Look to see if we've had retest of previously broken support that has led to price decreasing from now areas of resistance. And we're going to look at some of those here today. But I'm expecting altcoins to continue to decrease in value, much like Bitcoin, but at a faster rate with alts. So guys, that is our altcoin index. And so now with Bitcoin itself, we've been paying attention to this ascending wedge now for weeks. And once we finally broke out of there, we were expecting some sideways consolidation, which we did. And then we went to retest our level of this, the bottom of this falling wedge, in which we did. And we knew that if we were going to hold support here, that we would essentially just get a back test. We didn't see a change of trend at all. But when you have price suppression, when you have price react to a strong level of support, it's only a natural reaction to have a relief. In this case, we've been experiencing multiple relief rallies in crypto and the traditional markets itself. So now what happened today, you ask? Well, we had this, once again, retest of previous support, now resistance at 20K from the news, and we see Bitcoin slowly coming down lower, knowing that there is support at 18,124. So what am I anticipating next? I believe that we will eventually break this support, and we're going to come down into the 17.5, which is really at the bottom of this ascending wedge pattern. And we wait to see what type of reaction we get. Given that we have bearish price action, we don't have favorable numbers when it comes to any financial reports or economic reports on inflation globally, then my expectation is we're just going to continue to have bearish price action. It's not to scream bear, but given the information that we have from a macro standpoint, from a fundamental standpoint, and what the charts tell us, it's not really hard to assume that that is what's to come. So guys, I want to see 17.5 get retested. Let's say 17.6. I want to see price action come back all the way to the bottom of this ascending wedge pattern and see if we're going to get that little bit of bounce before continuing lower, or what could be expected next. So guys, keep an eye. We have supported 18K, and we know that the next level supports around 17.5, 17.6, giving the end of this pattern. And what can we expect going from there? So guys, that is Bitcoin. And next up, we are looking at Ethereum, which pretty much looks just like what we were looking at with the altcoin index chart. So what do we have happen here? Over the last few days here, given the completion of the Ethereum merge, what happened yesterday as we were coming into a new day, we had a bearish engulfing pattern. So the little bit of retesting relief rally that we received on Ethereum didn't hold, and we expected that, given that Ethereum is still in a bearish price pattern. So now when we come down here to a daily time frame, we rejected resistance at 1750. And we've been just dipping lower, which once again, we were expecting that. So at this time, I am looking for a retest of 939, 940 to see what type of reaction we get with price. but my long-term outlook still applies that we could see a $600, $700 Ethereum. So as I say, always be prepared for what is to come in these markets, given the economic standpoint that we're in, given what has been going on with the dollar, which we'll go over here to wrap up our video. Be mindful of your portfolio. Be mindful of the strategies that you are deploying when it comes to the crypto market itself. So guys, that's what I'm looking at right now. We had a rejection of 1751, and I expect price to come down to 1150 first, maybe some consolidation there. Then we expect to see a sub $1,000 Ethereum. So stay tuned to that. And so now we're going to go into some of our picks from our clients. And one of them happened to be Chili's, who has a really interesting partnership with the World Cup. So we did happen to see some price rally here as people are anticipating their involvement in this particular event. And so what one has to always remember that even with fundamental news, even if it's positive, if we have an overall market that is still bearish, we can still expect some bearish price action. And that's essentially what we got today, which is we had a retest of this area of resistance here at 25 cents. And what we did was happen to retrace from that area. So now if we go down to a smaller time frame, what are we looking at here? We've topped out. Well, we came to this area on 3 occasions before. We came back to retest. And if you guys are not familiar with patterns, I'll show you guys something here really quickly to be able to ever identify what you're looking at. So this is a classic inverse, not inverse, head and shoulders pattern. And what you're looking at here is you see price make a left shoulder. It goes back up to retest the high and it fails. And then you have one more retest the high and you get another rejection. You tend to fall lower there. And so now what we're looking at is, given we had this leg up, is where will there be support found? And so currently we are on that support at about 22 cents. However, given the bearish price action that we are having in the crypto market itself, could we expect this level of support to hold? We might get some consolidation there, but I'm really looking at price coming down to 20, 21 cents. And, is it to say it's just going to fall straight there? No, not necessarily. But giving all of this heavy, top heavy price action that we received, it only makes sense giving Ethereum's going down, Bitcoin is going down, and the dollar's going up. So keep an eye on this if you are holding and are trading this token, given the good fundamental news that we received about its partnership with the World Cup. We want to still be mindful of what's happened in the short to midterm with Chili's. So guys, that is Chili's. And so now we're going to jump over to Hex, which this was a token we covered before. And we mentioned that we did want to get this bit of price action, and we did. However, it did not hold. And that's nothing to, be alarmed about. Once again, we're in bearish territory, meaning that this is what we've been expecting. However, now it gets really interesting because for Hex itself, we are in a area of support where we've basically retested these lows that we've had. So yesterday we had a retest of this low, and as of today thus far, we are attempting to do something here. Now, would I say that this is going to be a change in trend? Not necessarily. However, we want to see how this plays out, given that this has played as support on multiple occasions in the past. So I say to keep an eye on what happens here, there is a area of previous broken support that is now resistance right around, let's say, but 3.5 cents. So is it possible that we get a little bit of rally here, a little bit of relief? Yes. Is it to say that this is our bottom? Not necessarily, given that we have lower price action below. So we want to keep an eye on Hex to see what type of follow through price action that we're going to get, given that we know that the overall market is still down. And when you jump down to a smaller time frame, we can see that. We had a little bit of a rally right here, and we're back testing currently right now. Given if this holds, then we might just come back and retest. So don't be too sold on any of these altcoins that are having these little relief rallies, given that we know the market is bearish. So guys, keep that in mind always. And so now, to wrap up today's session, we want to identify what's going on with the DXY. And so the DXY, also known as the dollar index, is been screaming higher for a very long time. Once we broke out of this falling wedge pattern, it's been continuous run since then. And given with today's news, we have now once again created new all-time highs during this bull run with the dollar. And so now when we take a look at what's going on here in the grander scheme of things, we see that we broke out of this 106 area, and there's a lot of price action between the 106 and the 128 area. Am I saying that it's going to go up there? Not necessarily, because there is some area of resistance before we even make it there, around the 120 level. So is it to say that we're going to go straight there? Not necessarily also, because we can see some bump and runs on the way there, but we know that that's essentially where we're going to be heading, which is 120. And what does this look like in translation to the traditional markets in crypto? Is that we're not going to go straight down, even with traditional markets in crypto. We're going to go down, break levels of support, going to expect relief rallies before we head lower. Vice versa with the dollar index, we're going to see prices go higher, make new all-time highs, retrace back to areas of support before we get to the grand level that we're looking for. So guys, I want to bring everything together here, which is we are in an understanding of what's been going on now for the last almost 3 years now, that we have not had favorable market conditions overall. We went from a market that had no money to a lot of money, and the money wasn't accounted for. And a lot of different policies, regardless of how we view them, were not in our best interest when it came to having the proper balance between supply and demand. We look at every economic environment across the globe where countries are all facing inflation. And for many of these countries, it became too expensive for them to adopt the dollar. Even being here in the USA, we have been experiencing inflation like crazy. So at this time, investors prefer to have cash, and that's translated across the charts. That's also noticeable with the bond market. So what is that to say? If we are expecting things to get a little bit worse before they get better, you want to protect yourself in this environment as an investor to make really good educated decisions, even if you're thinking long term, which is, how do I preserve my cash. Okay. The second thing is how to identify good value areas to invest in my long-term positions. So keep those things in mind when it comes to where we're at in this market right now, given that we are expecting a economic slowdown. We're going to go into Q4 here in the next couple months. And what can we expect for a global annual outlook on how the markets have performed and what to expect for the next year? So have a game plan for yourself for what you are going to choose to do. I am here simply to provide educational content from a technical outlet for how to best prepare for these scenarios based on what price action is telling us. So, guys, that is our wrap up for this week. Stay tuned for either Sunday or next week. I might have a surprise for you guys then, as we're going to be getting prepared for our newsletter that's going to give more insight from a macro and a fundamental standpoint, so you as a savvy investor can have all the proper tools to make the best informed decisions. So guys, happy trading, happy investing, and once again, have good strategies going into the rest of Q3 and Q4. Have a great day, guys.